Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thank you very much for listening to this video today, and as usual, please don't forget to like this video and subscribe to my channel. That will really help me to build up my audience. So to get things started today, I'm going to be talking about what happened in the markets last week, and I'm also going to be talking a little bit more about our performance and our strategy overall. So thanks very much for listening today. So I'll go straight into it. So last week, our portfolio performed pretty well. It was up about 1.17%. If we compare that to the main indexes, the Nasdaq was up just about plus 0.1%, so it was up ever so slightly, and the S&P 500 was down about 0.7%. Bitcoin was up about 7.5%. It had a nice increase after hitting kind of the lower end of the range, around 25,000 the week previously. So it had a nice little bounce back. So our portfolio actually did better than the main benchmarks last week. And I would say a lot of that is to do with the crypto move that we had last week. I also did some short-term positions. Last week, I had a successful position in orange juice, which I closed. It was a short, and I closed that at 13% profit. Just to let you know, there's an orange juice theme to today's presentation, today's cover, and that is because orange juice prices have hit all-time highs, and that's mainly because of the hurricanes, obviously, that happened in Florida, and a lot of the damage to crops, etc. And Florida is one of the largest orange juice producers in the world. And although obviously there has been a lot of an effect on the demand stayed pretty much the same for orange juice, but the supply has reduced significantly. It's led to shortages. It's led to increases in prices. However, I do like to take advantage of some of these opportunities because these things don't last forever, and often there is a major pullback after all-time highs in such commodities. So I closed one trade in orange juice, and I have another short-term trade that's also still open at the moment. I was pretty happy with the way that went. To look at 2023 as a whole and the benchmarks, our portfolio is up about 13.5%. That is doing better than the S&P 500, which is up about 11.7%. I'm slightly behind the Nasdaq, and that is mainly because that is skewed in a way, because basically the Nasdaq is made up of some of the largest technology companies in the world, and it's quite skewed to the highest weighting stocks within the Nasdaq index, such as Nvidia, which has obviously done extremely well this year, Apple, and a few others. So if we look at the broader economy, I think our portfolio is actually holding up pretty well, doing a lot better than China, even though we have Chinese stocks in our portfolio, as well as Europe, and we have some European stocks in our portfolio. So I'm pretty happy overall with how our portfolio is going for this year. I do understand that 2022 was a difficult year, and it takes a little bit of a while to build up your portfolio and to start to recover some of those losses from 2022. However, I'm very positive moving into 2024 and 2025, and I really thank you for your patience in that. Bitcoin's doing extremely well this year as well, and that's up about 69.64%, but that is on the back of a pretty horrendous 2022 that happened. We're still pretty far off all-time highs, but I'll go in a little bit into my crypto viewpoints at the end of this presentation. So I'm going to keep it pretty short for the main news last week. It wasn't too much news that went on last week, so I'll keep it pretty brief. As I said, the Nasdaq and the S&P 500 remained relatively flat. What happened is there is a lot of talk around the US government shutdown, and towards the end of last week there was an increasing likelihood that the US government would have a shutdown, and this started to weigh on investor sentiment. However, towards the end of the week, there was an agreement that was put in place by President Biden, in which agreed to extend that deadline a little bit further. So the likelihood of a US shutdown significantly decreased. Also, we saw some data that came out of the US in August, the core personal consumption expenditure, which is also known as the PCE index, which the Federal Reserve watches very closely. This, by the way, excludes food and energy categories, which can be quite volatile. This increased 3.9% from the year before levels, and this is the lowest annual inflation rate in about 2 years, but obviously way below the central bank's 2% target, which they've been talking about for a long time. Inflation is a pretty difficult thing at the moment because, as I've said before in previous presentations, we had a long period of time where the interest rates were starting to work. We had consecutive months where core inflation had continued to reduce. However, we have had a spike up again in oil prices and natural gas prices over the last kind of month or so. And this has started to take a strain again on inflation numbers and the CPI. But we do have very high interest rate numbers, and this is likely to be held for a period of time. So it's a bit of a touchy time in the markets because a lot of people don't know how long these interest rates are going to stick in place and how long that they can hold them at this level without there being a significant strain on the economy overall. So it's pretty interesting times at the moment. We've also seen consumer prices have increased 4.3 annually in September, and that is weaker than forecasted and the slowest pace in about 2 years. The inflation rate was a marked improvement from the 5.2% registered in August. Over to Europe now, and in the UK in particular, the UK economy grew faster than expected in the first 3 months of the year. And this is according to revised figures from GDP. The Office of National Statistics has said that the first quarter growth is going to be at about 0.3%, as opposed to the estimate of about 0.1%. Basically, we are seeing slightly faster than expected growth in the UK. However, I think it's pretty important to watch the markets at the moment. I think that while interest rates are as high, I think we're going to see some constantly changing data from some of the major markets. So as we move over to our top 3 performing stocks for last week, and our top performing stock for last week is Resmed, and that was up about 8.24%. That's a stock that I brought you a bit of a showcase on a few weeks ago in my last in one of my last presentations to you, and Resmed was at near yearly lows and had been suffering quite significantly. However, I think it's a stock that has a good long-term future. It's a product in which they sell mainly sleep apnea machines. It's a growing market, and I think once they reduce some of the competitive strains, I think that they're going to do pretty well. So that was up about 8.24%. Second best performing stock for last week was Comstock Resources, and this is a natural gas producer, and that was up about 6.57% as commodities did pretty well last week. And the third best performing stock for last week is Coinbase. Crypto did pretty well last week. As I said, we saw Bitcoin come off the kind of lower range of the 25,000 range, head up towards 28,000 type of range. Coinbase does particularly well when crypto volume increases because they make more money from fees, and it did pretty well last week at about 5.81%. Okay, so I'm just going to go over 4 charts now in my 𝗃𝗶𝗱𝗲𝗲 charts edition. And the first chart on the left I just wanted to show you was the US pending home sales index. And really what this shows is that pending home sales in the US have moved down to the lowest level since April 2020, a month where much of the US economy was shut down and the housing market is frozen. Basically, one of the main reasons why the pending home sales are at very low levels at the moment, and that is because the interest rates are very high. It's very difficult for people to really look at buying new homes at the moment because they're going to get locked into a much higher interest rate where they might have existing mortgages at a better interest rate. So there's not much incentive for them to buy new homes and also going to invest in new homes for buy-to-let properties, etc. So they're very low at the moment. So the inventory of houses is pretty low at the moment. Second chart I just wanted to show again on the housing market is another chart, which is the 30-year fixed mortgage rate, which is also known as Freddie Mac. What we have seen is the 30-year mortgage rate in the US has moved up to 7.31%. And this is the highest level since December 2000. So only a few years ago, this was only 2.65%. which was an all-time low. So obviously that was during the COVID period where interest rates were held down artificially for a pretty long time. And really interest rates have been very low since the financial crash in 2008-2009 period. However, they are back up to those very high rates again. And obviously this is discouraging people from taking kind of long-term fixed mortgage rates. The third chart that I just want to show you is the Fed's fund rates versus the core PCE inflation data. And what you can see is the Fed's preferred measure of inflation, which is core PCE, has moved down to 3.9% in August, and that is the lowest level since May 2021. The Fed's fund rate, also known as the interest rate, is now 1.5% above core PCE, which shows the most restrictive monetary policy we've seen since November 2007. So obviously a very tight monetary policy that's been in place in order to try and reduce that inflation that has been in place for a pretty significant period of time, which shows it's a really restrictive monetary policy that's going on at the moment. Last chart that I just wanted to show you is the strength of the dollar and the US dollar index ETF, which is known as UUP. And what we can see again is that the US dollar is starting to become pretty strong again compared with other currencies. Again, we're also starting to see very high commodity prices such as oil and natural gas, etc. And we're seeing a lot of strength in the US dollar, which makes it very difficult for companies who deal in dollars to operate in. So what we've seen over the last decade is the dollar index has a total return of over 43%, and every single currency has depreciated against the dollar over the last 10 years over the big major currencies around the world. So we've seen a kind of a much broader strength in the US dollar over the last kind of 10 years. And after a dip a few months ago in the strength of the US dollar, it's starting to get stronger again against some of the major currencies. So it's definitely something to keep an eye on. As we move on now to the crypto news and views, first of all, I just wanted to talk a little bit about overall what's been happening in the market as a broader sense. So obviously crypto has been ranging for a long period of time. We've been in that 25,000 to 31,000 range for a pretty long period of time now. And what's happened is that 31,000 has acted as a level where it's been very difficult to break. Every time that they've tried to break it, it's failed and moved back down over the 30,000 level again. And every time where Bitcoin has got close to that 25,000 level, it's managed to support it. So it just really shows that it's this very stage in the halving cycle. The halving is due to happen in about April 2024. Volume's been pretty low in crypto as well, especially in Bitcoin over the last few months. And Bitcoin just last week came off that kind of lower end of the range from that 25 up to about 27.5, 28,000 type of level. So one of the things that happened last week is that because of this impending government shutdown that was due to happen in place, this would affect a lot of the regulation agencies in the US. And what they decided to do is some of those deadlines for BlackRock and some other money managers that were due for one of their approval dates, they were pushed back before that any government shutdown was due to happen. So what I want to say now is it's pretty unlikely that a Bitcoin spot ETF will be approved in 2023. It's much more likely that Bitcoin spot ETF is likely to be approved at the beginning of 2024, which actually should be pretty good timing for it just before the halving as well. So don't have your hopes up that it's going to get approved in 2023. And actually, to be honest with you, it might be a lot better for it if it's approved in 2024 rather than 2023, when there's a little bit of lackluster demand behind it. But I'm pretty sure that there's going to be a lot of institutional buying and a lot of volume when that gets approved. So please stay patient on that. The other thing, big news from last week, was the Ethereum. Many Ethereum futures ETF were approved. I'm a little bit less excited about this because, again, it's another futures product. And what's going to be really important, I think, again, in the future is when Ethereum spot ETFs are approved rather than futures, because what we know from previously when Bitcoin futures were approved, it doesn't do a lot to the demand and also doesn't do a lot to the Bitcoin price because they're not physically buying Bitcoin. And also what in the futures products, you see a lot of people hedging and shorting the futures, etc., in order to manipulate the price a bit. So I expect that to happen a little bit with Ethereum. So it's not as big news, but I think that it got a lot of positive press coverage, and I guess it's a little bit step closer to potentially one day getting an Ethereum spot ETF, but obviously much more likely that a Bitcoin spot ETF will be approved first. So obviously Grayscale have also launched an application for an Ethereum ETF this week. VanEck was approved, a futures ETF, as well as a few other providers. The other piece of news that I wanted to talk about is that one of the founders of Three Arrows Capital was arrested in Singapore and has been arrested. And there's been a lot of media coverage about Three Arrow Capital, and which was a failing hedge fund, which kind of went under about a year ago now, similar time to when FTX failed. And I think what we're seeing now in the cycle is where last year, towards the end of last year, in the depths of the bear market, what we saw is a lot of scams that were happening, a lot of bad actors in place. And because of what was happening in the bear market and severely depressed prices, what happened is a lot of their mismanagement or their scams came to light, and their businesses went under, such as FTX, Three Arrows Capital, Luna, Terra failed as well. And what we're now seeing is where some of these bad actors are now starting to pay for some of their crimes that they did, and we're starting to clean up the space and obviously prepare for a new bull cycle in the next thing, which is, I think it's quite healthy in a way that we cleanse out some of these bad actors, and as we move into a new bull cycle, hopefully next year. We've also seen the ongoing case of Sam Bankman-Fried, FTX, and there has been a lot of legal press coverage at the moment about what's happening with FTX and about his parents' involvement, etc. And it's going to be pretty interesting to see. I personally hope that he spends a long time in jail, because it costs a lot of FTX customers a lot of money as the funds were seized and misappropriated by Sam Bankman-Fried and some of his associates at FTX. So I hope justice is served, and I'm pretty glad to have him out of the space, to be honest. Lastly, I just wanted to show you a Bitcoin chart. And really what this just shows is the historical days in a certain range. So what we have actually seen is we have seen kind of one of the longest ranges of Bitcoin in this current price range for a long time. So I think we sit at about 586 days in this kind of current range between 25 and 31. And I think this is pretty important for a number of reasons, because the kind of longer that Bitcoin stays in its range, the more kind of pent up pressure that it builds up. And what it will take is just one big catalyst that can really spring the price into action. Again, I'm not expecting that to happen in 2023, although I think we could see some upside before the end of the year. I expect that to happen closer to the halving in 2024, as we have a supply shock because of the halving, which is a very important thing. The other thing is I'm expecting a Bitcoin spot ETF as well, which will bring a lot of volume as well to the space. So I think that it's pretty good. I think that we are approaching the early stages of the new Bitcoin bull run, but I think it will swing into effect Q1 2024. So thank you very much for listening to my video today. I will keep it fairly short. If you haven't done already, please join my Discord group. We have an awesome group of people that are regularly having discussions and chats on a regular basis. You can ask me any questions you want at any time, and as an approachable investor, I'm always there to answer them for you. So thank you very much, and have a great week ahead.